Hello, good afternoon, everyone. I hope you all are staying safe and staying home. And really glad that a lot of people have a lot of questions from chapter 4 itself, right? So it's really good you guys are studying and revising. But I just have one small request to everyone who's posed those questions in NCQs as well as some of the topics from chapter 4 like FIIs or Nidhi Company, right? I would really request we park all these questions because what I'm planning is today let us cover chapter 5 as much as we can. And in the next session, that is on Monday, right? So we will cover all the questions from chapter 4 and chapter 5 plus all the NCQs, and I will also try to bring in maximum questions, around 15-20 revision questions, right? So like we did for chapter 1, 2 and 3, what I'm planning is we will bring more questions, 15-20 questions for revision of chapter 4 and 5 specifically. And we will also discuss all the doubts that you have. So I would really request if you park these questions for now. I have all these questions with me. I will absolutely answer all of these, right? So be assured on that. Let us focus on chapter 5 today, right? The motive and the agenda for today's session is to cover chapter 5 as much as we can because it's a really big chapter, right? So before I go further, let me just share my screen and then let us begin with chapter number 5. Right. Okay. So we'll be talking about chapter number 5 today. If we can look at the flow of the entire subject, right? This entire subject started from understanding business, understanding economic activities, went on to understand the business environment, right? Macro and micro level, macro economy, or we talked about geographies, we talked about globe, right? And then we talked about micro, the organization itself, the customers, the intermediaries, the suppliers, right? We talked about all those things that actually affect the business. In chapter number 3, we talked about business organizations, huge organizations, government organizations, special economic zones. We talked about global companies, banks, pharmaceutical companies, right? Coming to chapter number 4, right, where we talked about the basic changes that were brought about in the economy, right? The LPG, right, in 1992, and that actually facilitated the business, that actually helped the economy to boom, right? Today's chapter, that is chapter number 5, is focused on the organizations, the government organizations that are actually facilitating businesses, right? Those huge government organizations, the idea of which is to facilitate, is to help business, right? Okay, before I begin, these are two headlines, right? On the screen, I have two headlines which read, number one is COVID-19, the world economy that took elevator down faces steep stairs back up. That means the COVID-19, the world economy went for a toss, right? It went straight down because of COVID-19. Our GDP is also the number that is that is being projected in news. If you guys are reading it, it's around negative 23% is what the GDP we are facing in India, right? And similarly, if you read the good part of the news, right, why is it like even if you see because of fight with China or the COVID-19 issue, right, a lot of more industry has become private. A lot of part of LIC or a lot of part of the Coal India has been sold to public. It's opening up more. The economy package is growing more, right? All of this, if you can understand, is actually for facilitation of business. That means it is to help the businesses grow. It is for helping the economy, right? It is facilitating businesses. This is what the chapter is all about. We are going to talk about organizations which actually help in facilitating businesses, the economy, right? So this is the basic idea of chapter number 5. I will just repeat, I think most of you have just joined. A lot of MCQs, right? A lot of MCQ questions by Sangam, I see by Vanshika has, Prachi has a lot of questions, right? Many of you have a lot of questions. These will be answered, but my idea is we'll do this in the session on Monday, right? I have a session with you guys on Monday, and we will actually focus on chapter 4 and 5 complete revision with MCQs. I will bring in questions. We'll have a discussion, whatever problems, whatever issues you are facing in chapter 4 and 5, we will have a full-fledged session for that, right? With around 15-20, I haven't decided on the number, but I will bring about really tough questions. My idea is to give you tough questions now. But in the last sessions, we have been discussing what we have studied, the easier part of the question, like straightforward questions. But in Monday's session, I am trying to bring in the toughest questions I can, right? It'll be more of a challenge to understand from chapter 4 and 5 itself. So how do we understand the concept? How well do we understand the concept? And then we will have that revision with the MCQs. So really pause on those questions for now. We will answer all of these, right? Coming back, so please focus right now on chapter number 5, that is organizations facilitating business, right? Facilitation of business means helping business in terms of money, in terms of support, in terms of different legislation, that is laws, right? Okay, straightforward jumping into the very beautiful concept of economy, which is GDP, right? The gross domestic product. The gross domestic product is actually the monetary value of all the final goods and services produced in a particular year. What is GDP? GDP is the monetary value, of all the final goods and services, all the final goods and services produced by each and every business in the country, in the economy, in a particular year, right? That is gross domestic product. Now, final goods and services are produced by whom? The answer is simple, by businesses, small as well as big. Consolidation of all this product and service, goods and services by each and every business in a particular year is called gross domestic product. Now, the question that comes to my head is, can a business thrive on its own? I want you guys to answer, can a business thrive on its own? Can a business function on its own? Can a business live on its own? Does it need any help, or it can actually work in isolation? Does it need any help? Right? The question is, can a business thrive on its own? Does it need help or not? Right? I want you guys to answer in yes or no. Wonderful. I have an answer already. Thank you, Arihant, for answering. I want others to answer too. Be interactive, please. Absolutely. It needs help. Okay. Wonderful. I have good number of answers. It cannot thrive on its own. It needs help. Yes, the business needs help. It cannot thrive. It cannot function on its own. So a business needs help. And who helps the business in an economy, right? The government. So it needs facilitation. It needs help. It needs support and a strong economic environment to flourish, to grow, right? So this is what we understand. A business needs support, a good economic environment to grow, right? With that thought, we will be discussing this chapter, that a business needs help. At what level, who helps them, how do they help them is what this chapter is all about, okay? Quick question on the screen. Let us see how many of you are good at general knowledge. India's GDP, gross domestic product, that means the value of all goods and services produced in India for the financial year 2020, that is last year, is what? The GDP of India is it 2.99 trillion, 3.2 trillion, 5.01 trillion, or is it 1.89 trillion? India's GDP for financial year 20 is what? Let us see how many of you know this. This is a very, very basic thing that we all should know, right? Okay, let us see how many of you know it. Okay, and please do not Google the answer. You have to think on your own. Let it be wrong, but think on your own, right? Don't Google it. Okay, 10 seconds on the clock. 9, 8, 7, 6, 5, 4, 3, 2, 1. 0. 10 seconds on the clock. 9, 8, 7, 6, 5, 4, 3, 2, 1. 0. 10 seconds on the clock. 9, 8, 7, 6, 5, 4, 3, 2, 1. 0. 10 seconds on the clock. 9, 8, 7, 6, 5, 4, 3, 2, 1. 0. 10 seconds on the clock. 9, 8, 7, 6, 5, 4, 3, 2, 1. 0. 10 seconds on the clock. 9, 8, 7, 6, 5, 4, 3, 2, 1. 0. 10 seconds on the clock. 9, 8, 7, 6, 5, 4, 3, 2, 1. 0. 10 seconds on the clock. 9, 8, 7, 6, 5, 4, 3, 2, 1. 0. 10 seconds on the clock. 9, 8, 7, 6, 5, 4, 3, 2, 1. 0. 10 seconds on the clock. 9 Good. Okay. I see a lot of mixed answers, so I think that's a challenging question. Last 5 seconds and then we will reveal. Wonderful. Okay, the correct answer is $3.2 trillion. The GDP of India for financial year 20 is $3.2 trillion. Right? I think you all will remember this now. Easy revision, right? Okay. Now a very important thing that we are going to discuss it, but I want you to not be scared of the terms that are given, right? We will explain this in the easiest form possible. I will try to explain this in the easiest form possible. But for now, let us understand the technical part first, okay? So business facilitation, helping a business, right? So there are three levels. The first, that is the closest, the very closest level to the business is called point of contact facilitators. What are they called? They're called point of contact facilitators, right? These are the different individuals or different small businesses that are actually helping, the business, right? That is actually helping the business to grow, right? So the very organizations and small businesses which are very close to the business are called point of contact facilitators, right? On the second level, we have aids to trade, right? The first level, the closest is point of contact. The second, the outer level is called aids to trade, right? Aids to trade means helping. Aid means to help, right? So support to trade, aids to trade, right? These are different businesses that are actually helping a particular business to grow, to thrive, to function in the economy, right? And the third, the broadest level, the outermost level in the economy that is actually helping a business to grow, to work in an economy is called funding and non-funding institutions, right? They are called funding and non-funding institutions, right? Like RBI, SEBI, CCI, that is Competition Commission of India, and IRDAI, that is Insurance Regulatory and Development Authority of India, right? And then we have development banks like NABARD, okay? So this was super technical. First is point of contacts, the closest. The second is aids to trade, the second layer. And the outermost layer is called funding or non-funding institutions, right? If you have to understand this concept, let us go into a simple example, okay? And then we will come back to this technical, and I'm very sure the entire concept will be clear, okay? Let us suppose there is a guy called Ajay, okay? So Ajay wants to open a furniture shop. Now Ajay dreams to open a furniture shop in his hometown, okay? So what does he need? Ajay needs a legal and financial advisor, right? Ajay needs a legal and financial advisor who will help him set up his company, who will help him get finances from bank, get finances from different parties or different individuals, right? A legal and financial advisor to set up the business. Second is he needs a workshop. He needs a place where he can get his goods from, where he can get the furniture made, right? The second thing he needs is a workshop, a place where he can get the goods made. And the third important thing is he needs transportation. He needs tempos. He needs trucks so that he can get this furniture to his shop, from his shop to the customer, right? This is basic. Ajay wants to open a furniture shop. The first things he needs is a legal and financial advisor, a workshop where he builds the furniture, and transportation so that he can transport his goods, right? Now, for this, the financial and legal advisor will take Ajay to banks, right? He will take Ajay to banks and insurance companies so that you get your money from the bank, you take a loan from the bank, you get your business insured by an insurance company, right? And you also get your shop, you get a shop on rent. So he takes him to real estate agent, right? So that advisor takes him to a real estate agent so that he can rent a shop. For that, he goes to a bank where he can take a loan, and to an insurance company where he can get his goods insured, right? Now, all this like banking, insurance, real estate, competition, right? All these are actually taken care by in the entire economy of India by huge organizations which are actually looking after whether everything in these industries is going right or not, right? So the basic idea is whether the activities going on the economy, going on in the economy are right or not, right? Are they as per the rules? Are they fair? Are they for the development of the economy? For that, we have four major organizations: RBI, SEBI, IRDAI, and CCI. Okay. Now, with this example, let us quickly go back to the technical part. Okay. First one I discussed, Ajay wanted to open a furniture shop. He went to a logistics provider, transportation, right? Incubators, real estate and investor agencies. Incubators are advisory firms which help you form a company. They guide you how you should operate a business, right? They help you get funding. They help you operate a business, advisors, right? Financial consultants, right? He went to a financial consultant. And merchandiser, right? That means the person who is providing him with the furniture, suppliers, right? So at the very basic level, when he wants to start a business, he goes to a financial advisor, a workshop, transportation. That is actually point of contact facilitators. All those are point of contact facilitators. As simple as that. These are all technical terms, but if you have to understand, this is point of contact facilitators, right? These are point of contact facilitators, legal and financial advisors, merchandiser, that is the supplier, logistics, that is the transport, right? On the second level, that is aids to trade, that is support, the organization, the businesses that are actually supporting the business, the trade, aids to trade are banking, banks, insurance companies, huge transportation companies, right? Warehousing companies, real estate agents, getting those rents, right? So these are aids to trade. These are at the second level. A financial agent, a merchandiser, or logistics, transport people are actually getting their services from the second layer. That is banking, insurance, transportation, right? The industry, that is the second layer of facilitation. And the third layer, like we all know, we just discussed, the funding and non-funding institutions. The major father institutions by the government in the economy to regulate, to see whether the functions in the economy are going right or not, whether they are being as per the law or not, to check everything, to control everything, right? RBI, SEBI, Competition Commission, Insurance Regulatory Body, and development banks like NABARD, right? So three layers of facilitation, point of contact, aids to trade, and funding and non-funding institutions, right? With this example, we just discussed all the three layers, okay? A quick question for all of you, and side by side, I'll also answer the questions I have. But for that, the question on the screen is, which of the following is not a government's initiative for furthering and facilitating businesses in India, right? Which of the following is not a government's initiative for furthering and facilitating businesses in India? 30 seconds on the clock, please. Let us see who can answer this question. Incubators are actually like advisories. They are groups of individuals that help you understand how to operate a business, how to get funding, how to get money from the market, and how to operate, how you should market. So they're actually advising how to operate a business, right? So those are incubators in the very layman language. However, it is more relevant in the technology field, right? Incubators are actually more like think tanks, the organizations and groups of individuals that help you understand the business and tell you what can be done, what cannot be done, what you should do. Like it's more of an advisory, right? Guidance and advisory. Those are incubators. If you know, one of the biggest incubators in the world is Y Combinator, right? If you're interested to read about it, note it down somewhere and read it on Google. You will get to know what is incubator in entirety, right? The biggest incubator is Y Combinator. Okay, I think most of you got the answer correct, right? So now you know what actually we understand by facilitating business. That is support. help the business to grow, right? Okay, do I have more questions? Okay. Okay, Krishna, GDP is the value of all the goods and services produced in the economy. The value of all the goods and services produced in the economy is GDP, right? Okay. Yes, SIDBI is also kind of a development bank. Aids to trade are businesses that actually help the business to grow on the second layer of it, right? Like banking industry, insurance industry, or real estate industry. Those are aids to trade, right? The correct answer, absolutely. The correct answer is Beti Bachao, Beti Padhao. That is not for business facilitation, that is a social cause, right? But other three like Make in India, Startup India, Atmanirbhar Bharat, Vocal for Local are all for facilitating, supporting the businesses to grow in the economy. You got it absolutely right. Facilitation of businesses supporting the business. And I think the concept is clear about this chapter. We can go forward. Okay, the idea of this chapter, we just studied the three layers: point of contact, aids to trade, and third was funding and non-funding institutions, right? Chapter number 5's focus is on understanding these organizations, these government organizations which are funding and or non-funding, right, that are actually helping the business, right? The idea of chapter 5 is to understand the government organizations that are at the outermost level of facilitation of business. Outermost level, out of those three levels, point of contact, aids to trade, funding, non-funding institutions, we are going to discuss the outermost layer, that is facilitation of business by funding and non-funding organizations of the government. Okay. Quick thing, which of the following are non-funding and which of the following are funding, right? Non-funding is RBI, SEBI, CCI, and IDBI, right? I'm sorry, it's not IDBI, it's IRDAI. There's a mistake, I'm sorry. And for funding, you have development banks like NABARD, right? Like that is Agricultural Development Bank, right? So what is the difference between non-funding and funding? The basic idea is non-funding is actually the organizations which are not giving out money to the business, right? They are not spending, they're not giving out straight out money to the businesses, but they are helping the business to grow. They are helping the business to actually flourish in the economy through their policies, through their rules, through that act, through their functions, through their duties, right? So duties of RBI, functions of SEBI, functions of CCI, functions of IRDAI, all these are actually not giving out money to the businesses, but they're actually helping them through their functions and duties to help them grow and operate in the economy. While funding, like by funding organizations like development banks, like NABARD, are actually giving out money to the business, right? They're going and giving out loans, they're giving out economic support, they're giving out monetary support to the businesses to grow and flourish in the economy, right? So that is the basic difference between non-funding and funding organizations. Okay. Quick question on the screen. Okay, we will also answer, you have a lot of questions, we will answer that. But now question number 3 on the screen. Which of the following is a funding institution? We just discussed. Which of the following is a funding institution? Is it Reserve Bank of India? Is it Finance Ministry? Is it Startup India? Or is it NABARD, that is National Bank for Agriculture and Rural Development? Which of the following is a funding institution? Okay. Point of contact are the very close businesses to a particular business, like in example of Ajay wanting to open a furniture shop, right? The businesses that are directly helping him, like the real estate agent is giving out services, or the financial advisor is giving out services. Point of contact, they're contacting him one to one, right? There is a conversation, there is a communication one to one, like the supplier, like the transportation company, right? All these are point of contact. Wonderful. A lot of answers. Okay. I'll take up a question. The question is, uh, Shreyas, that's a very good thought if you're thinking how the GDP can be increased. Well, we have a lot and lot many things for the GDP, right? The basic idea, if you can see, is actually funding the industry so that there are more jobs, there are more people employed, and when people are employed, when there are more jobs, when there is more industrialization, right? Instead of service, if you have more product being created or manufactured in India, that will actually help the economy to grow. While we can export and more money will flow into our economy, and that is one of the things that how GDP can increase, right? No, Disha, GDP is the total income population to the ratio of total population. That is not GDP. That is actually what you're thinking is that is called, I think, called per capita income, right? So you're confusing between the two. It's called per capita income, but GDP is actually the value of all the goods and services produced in a particular year. Ujjwal, is the NABARD RBI of rural banks? If you can think on the concept wise, yes, but there is a huge difference. RBI is not non-funding and NABARD is funding. RBI does not give loans to businesses, but NABARD gives loans to the agriculture, like people engaged in agriculture, right? So that's a big difference there. Sahil, I am talking about GDP of financial year 2020, FY20 last year. So that should give you the correct answer then. Sort of freight forward is transportation outside from the business to the customer. That is freight forward. Freight is transportation, right? Okay, the correct answer is NABARD. Which of the following is a funding institution? NABARD is a funding institution. It gives out money to the agriculture businesses, right? Okay. Now the very first non-funding government institution we are going to discuss is Reserve Bank of India. Okay. Non-funding government institution number one we are going to discuss is Reserve Bank of India. What is the Reserve Bank of India? What does it do? Right? What are its functions? What are the different things it does? How is it actually helping the business? This is what the question should come to your mind, and this is what we are going to discuss, right? So RBI is the apex body of banking in India. Apex means topmost. Apex body of banking in India is the topmost body of banking in India. It is India's central bank that regulates the entire banking sector of the country. Regulates means looks after. Regulates means looks after the entire banking sector of the country. Apex body is the topmost body of banking in India. That is Reserve Bank of India, right? It was founded in 1935 and the headquarters are in Mumbai, right? Okay. Reserve Bank's affairs are governed by the Central Board of Directors. Who governs the affairs, the functioning of Reserve Bank of India? Who looks after the RBI's functioning is Central Board of Directors who are appointed by the Government of India, right? Central Board of Directors appointed by the Government of India as per the Reserve Bank of India Act of 1934. Central Board of Directors appointed by the Government of India as per the Reserve Bank of India Act of 1934 is what governs the function of Reserve Bank of India, right? The topmost bank in the India, the Central Bank of India is the Reserve Bank of India. It looks after the entire banking sector, right? That is Reserve Bank of India. Quick question, again a general knowledge question for you all. Let us see who knows this. Who is the incumbent, that means the current governor of RBI? Who is the current governor of RBI? Is it Urjit Patel? Is it Nirmala Sitharaman? Is it Ajay Tyagi or is it Shaktikant Das? Okay, no Google. Let us go for a guess. Even if you are wrong, let us see who can get the guess right. Who is the current governor of RBI? Is it Urjit Patel? Is it Nirmala Sitharaman? Is it Ajay Tyagi? Or is it Shaktikant Das? Give it a guess. Okay, wonderful. Absolutely, Moksh. So aids of trade, point of contact, aids to trades, and the funding are all interlinked while they are at different levels, right? They are linked to each other, but they are at different levels, right? The first level is your point. The number one is points to contact. The second layer is aids to trade, and the third layer is funding and non-funding institutions, right? They're all interrelated. Okay, I have answers. I think most of you are Googling, which is not right. I said you can guess it, but okay. The point is getting to know who is the governor of RBI is the aim here, right? You can be wrong. Okay, Khushi, what is your query? Let me see. Well, that is what the job of the government is, Khushi, right? Like bringing out initiatives, trying to bounce back the GDP, right? It cannot just sit hands on hands. It has to get some initiative. It has to get loans from other countries, from the World Bank, from the International Monetary Fund, and facilitate the economy, right? That is what the idea is. That is what the government has been elected for. So how they're doing it is a very good study. If you're very interested in economy, like I would really suggest just read some articles in the newspaper, right? They're getting funds from the world. That is the simplest I can tell you. They're actually getting funds from different countries, from International Monetary Fund, from World Bank, plus they're also getting taxation from the people, right? People are paying taxes. There is no relaxation on the taxes for this year as yet. So also the money is coming from the tax. The correct answer is Shakti Kanta Das. Wonderful. 80% of you got it correct, right? 80% of got it correct. Wonderful. Those who did not, I think you guessed it and now you know the correct answer. So the idea is to know what is right rather than being wrong. So now you know who is the governor of RBI. It's Shakti Kanta Das. Okay. Wonderful. Those who all answered without Google, wonderful. Okay. Any questions? Okay, we'll answer that going forward. I had that answer already. Okay. Now we understood what is RBI. Now the second thing that comes to my head is what does RBI do? What is the role of RBI? Right? I got to know it is the apex body. It is the apex bank in India. I know it is the topmost bank in India. It is governed by a body of directors appointed by Government of India. It is governed by the Reserve Bank of India Act of 1932, right? If I'm right, it's 1934, sorry. Reserve Bank of India Act 1934, right? So what does it actually do? What does RBI actually do? It's simple. You can think each and every point here you would be able to relate because it is so simple. It develops, it strengthens and it diversifies countries' economic and financial structure, right? It develops the economic structure. It develops an economic environment where the business can flourish, where we have banking, where we have loans, we have different multiple banks, private banks, government banks. They are developed, they are strengthened, they're diversified. Private banks, public banks, rural banks, right? They're diversified, like distributed, divided into different sectors for economic and financial structure, so that the economy has a structure, has a framework where businesses can get loans, right? And then invest in the business and grow. Second is maintain economic stability, right? Like there is money flow, like people are using trading via money through digital payments, right? So there is economic stability so that the country has money to give and has money to take, right? That is the question you have, like how is government going for initiatives? How is government spending when the GDP is negative, right? So RBI has that money. The RBI has gold. Against that gold, it borrows money from the world and it puts it in the economy, right? so maintains economic stability so that the country does not flop, so that the country does not go into a recession. It tries to maintain economic stability. Third, controls monetary policy. We studied what is monetary policy, right? In business environment, we studied what is monetary policy. Who controls that monetary policy? RBI. The answer is RBI controls that monetary policy of the country. It is advisor to the government on economic and financial policies. We have an elected government that is sitting. We have ministers. We have Ministry of Finance. RBI is actually advising them. This is what we should do. Okay, this is what you're bringing. This will have this impact or this will have that impact. It is advising the government. Like, this is what we can do or this is what you should do, right? It is an advisor. It is a guide. It gives guidance to the government on economic and monetary debates and discussions, right? Fifth, it represents country in international economic forums. On the world level, when there are discussions on economy, when there are discussions on money, when there are discussions on how your country is doing on the monetary economic side, RBI goes and represents the country. You will see RBI governor going and discussing on the panels, how is India doing, what is India doing, right? So it represents country in international economic forums. It develops adequate, that means complete, sufficient. It develops sufficient banking system for growth of money and markets. It ensures that there are ample number of banks. The banks have ample, sufficient number of money so that they can give out loans for businesses to grow, right? It makes sure, it develops that environment. It ensures that there are number of banks in rural sector, in urban sector, or in places where businesses are booming. It ensures that, it develops that, right? It is a friend. It is a philosopher, and it is a guide to commercial banks. It helps in development of banking system, and when those banks are developed, it helps them as a friend. It tells them that, boss, this is what you can do, or hey, let's do this, or it's a philosopher. It tells them, like, I think we should do this. I think the banks should go for this. I think the banks should bring out more money, or you can also give loans to these sectors or give loans to these particular sector of businesses, right? It is a friend, it is a philosopher, and it is a guide to the commercial banks like HDFC, like ICICI Bank, right? All these commercial banks, it guides them. It tells them, like, boss, this is what we can do, right? Tries to control inflationary trends, right? The value of money. If you see, it tries to control inflation. Inflation is nothing but the value of money, right? If I can explain you in the simplest terms, inflation is the value of money. If you can, I can give you the simplest example, right? Think of this, bread. Like, you buy a bread for around 40-45 rupees today, right? A loaf of bread comes from around 35 to 45 rupees, right? But in 2000, 20 years ago, that same bread for rupees 20 or 15, right? So 15-20 rupees bread is now for 45 rupees. This is inflation. The product remains the same, but the value of money decreased. For 15 rupees, I was getting that bread. Now I have to pay 45 rupees for the same thing. This is inflation, right? This is pure example of inflation. There is inflation in the country. Now RBI tries to control this inflation, right? And it is always a good thing for a developing country. Remember this, like, this is out of syllabus, but good knowledge for you if you want to understand. Inflation is really good for the developing economy. Inflation is an indicator that the economy is growing, right? If there is no inflation, that means the economy is not growing. As simple as that. Why is a homework for you, right? If you're interested to study, like, why did I say this? Why is an growing economy good? Inflation is good for a growing economy. Why is it so? That's a homework for you, right? Study about it. It's a really interesting topic. Coming back to RBI, the role of RBI is to control inflation, right? Even if the bread is right now for 45 rupees, RBI maintained it is not for 100 rupees, it is only for 45 rupees. Similarly, the incomes also increase, right? Your father or your grandfather was actually earning 10-15,000 per month, and that was ample. Now you also hear people earning 80,000, 1 lakh rupees per month, and that is also not sufficient, right? So inflation is on both sides. That is what RBI tries to control, right? Last is channelize credit into priority sectors. Channelize means to flow the credit, to flow loans into priority sectors like agriculture, export, small enterprises, medium, small and micro enterprises, right? To channelize that, to flow the loans into priority sectors where money is needed for the economy to grow, right? That is agriculture, export and MSMEs, right? So these are the roles of RBI. This is what the RBI actually is concerned with. This is what the RBI has been developed. RBI has been put in place through an act, Reserve Bank of India Act of 1934. RBI was set up by the government for all these functions, for all these roles. This is what the RBI does. It strengthens the economy, controls inflation, ensures banking system is appropriate in the economy, ensures that those banks are actually functioning properly, guides them, supports them, acts as their friend, channelizes credit in priority sectors, right? Agriculture, export. So this is what RBI does. As a non-funding, we did not read that RBI is giving out money. It is not giving out money to anyone. It is a non-funding organization, non-funding institution, right? It is not giving out money. It is creating an environment. It is checking, developing, strengthening, and checking that the environment, the economic environment, banking environment is faring well, is doing well in the economy, right? It is not giving out money. It's a non-funding institution, right? Okay. Quick question and a few on the screen. RBI was originally privately owned. RBI was originally privately owned, but later it was fully owned by the government of India. Whether this is true or false, what do you think? RBI was originally privately owned, it was owned by some particular organization or some group of individuals, and later it was fully owned by the government of India. Is it true or is it false? Okay, and I'll take up questions as well. Okay. Absolutely, Vipin. If you have read it, I'm really glad you're reading news about FDI, right? It will surely create a problem, but let's see what happens. There would be some movement. We'll have to wait for this month at least, right? We have the monsoon session going on in the parliament. Let us see what the outcome is of this change in FDI. Okay. Indian currency is less than US currency. Very good question for economy, right? Really good question. Jay, I would really want you to park this question. We'll discuss this on Monday, right? I really want to discuss this point on Monday. So please save this and recall. Please send this question again on Monday. It is a really interesting topic. We'll cover this in 2 minutes, right? Okay. Absolutely. Inflation, the value of money decreases and increases in prices. Absolutely. The value of money decreases and thus the prices grow, right? For the same thing, you have to pay more. That is inflation. Does aids to trade include advertising agencies? Absolutely, yes. Everything that is contacting with the business one-to-one is point of contact. And aids to trade is actually the advertising industry, not the agency. Okay. So if you see the marketing industry is aid to trade, but the advertising agency that is contacting the business one-to-one is point of contact. Okay. Good thought, Disha, on inflation. Why developing economy should have inflation. Good thought on that. Really happy you're reading it. Absolutely, Apeksha. Wonderful, wonderful reason, because inflation indicates increasing purchasing power. Really good thought. Really glad you guys are reading about economy. Absolutely. Boosts consumer demand. Wonderful. Wonderful. Okay. Harshvardhan, I am reading your query. Let us see. What is your query? Is privatization of various public sector is good for our economy, which is yet to be developing? Well, I think yes, Harshvardhan, to some extent, unless it becomes a monopoly, right? Unless it becomes a monopoly, it is good that the private players are coming into for a better quality, more demand and supply, right? If the market is more on demand and supply, the consumer is always at a benefit, right? So let's see how it fares. But I think to a certain extent, yes, it is good if you're privatizing. Okay, so Vanshika, let me see. I think I'll try to answer most of the questions. If I'm missing any of the queries, I'm really sorry. I'm trying to answer each one of them. So keep posting. I'll try to see as much as I can answer. So please excuse me if I cannot answer each one of them, but I will surely try to answer everyone. Okay. Chaitanya, inflation is as simple as that. For the same amount of, for the same product or service, when you have to pay more money than earlier, it is inflation. The value of money drops, right? That is inflation. Okay. No, customer is not aids to trade. Customer is the actual beneficiary of the product. Aids to trade is the back, is the from where the business is getting support, right? Because customer is not supporting the business; it is buying. It is actually like buying from the business. Okay, Vanshika, I'm trying to find your question. If I'm not able to find, please, if you can just put your question again, that'd be really helpful. Thank you. And the correct answer is on the screen. RBI was originally privately owned, but after nationalization in 1949, right? In 1935, RBI was set up, that is pre-independence. So till nationalization, that is till 1949, RBI was privately owned, and it was fully owned by the government of India after nationalization in 1949. So that is a really interesting fact about RBI. It was privately owned, but then government of India took over and it became a part of government of India institution, right? The government of India is actually controlling the RBI, right? Okay. Yes, Ujjwal, I will see your question, but let us go to the next topic. I'll answer that. Please be assured I'll answer that. Okay. Now, what are the functions? We understood about role, like why was RBI there? What does RBI actually do, right? What does RBI actually do is what we discussed, but how does it do that? How does it do that? The question is, I know RBI is facilitating economy, it is helping the banking sector, it is developing, it is supporting banks, it is doing this, it is controlling inflation, it is like channelizing credit to the priority sectors. Okay, I get it. This is what RBI is there for. This is what the RBI is supposed to do. But how does it do that? The question is, how does RBI do that? Now, here on the screen, we'll discuss how does it do that. Number one, issuer of currency. It is the sole authority for issue of currency in India. The notes, right? 500, 2000, 100, 50, 20, 10 coins. All these currencies are issued by RBI. It controls the flow of currency in the economy. It is the only authority that can issue currency in India, right? You, me cannot go and issue a currency, right? It is the only authority that can issue a currency in India, right? It is the issuer of currency. That is how it is controlling the monetary policy, right? Number two, banker's bank. It is the bank to the bank. It is banko ka bank. It is banker of the banks, right? It controls the commercial banking system under Reserve Bank of India Act of 1934. It controls the commercial banking system. HDFC, RBI, Punjab National Bank, this bank, that bank. Any bank in India, any foreign bank working in India is controlled by RBI under the powers of Reserve Bank of India Act of 1934. It is banker to the banks. It controls the commercial banking system. It requires banks to maintain minimum cash reserve ratio. We will discuss that. It requires the bank to maintain certain amount of cash with it. I will discuss that. We'll not discuss it here. I'll discuss it in another 15 minutes, right? It assists scheduled banks and cooperative banks through discounting eligible bills, loans, and advances, right? Sometimes some of the banks which are in the agriculture sector, which are scheduled banks working in the rural sector, cooperative banks, right, which are actually working as a cooperative society, group of individuals. Now, these banks might sometimes have a problem that they are not able to get the money back. They give out loans, but they do not get the money back. There are defaults. So then RBI helps them. RBI helps them by giving them further and easy loans. Instead of a 9 or 10 or 15% loan, they give them loans at 6 or 7% back to the bank, right? Not to the businesses, but to the bank itself, to the banking, to the cooperative and scheduled banks. It helps them, it assists them, right? It conducts inspections and asks for returns from banks. As a chartered accountant, you will study, right, under audit, under bank audit, you will study when you further up your syllabus in next levels of this course, that banks have to file return with the RBI every year, every quarter, even you have monthly returns as well. So banks have to report to the RBI that what are they doing? What are they doing with their money? What is the money in the economy being used for? So this is what the banks have to file return for with the RBI. So it conducts inspections and asks for returns from the banks, right? It conducts inspections and asks for the returns from the banks. It is the banker's bank, right? It is issuer of currency. It is banker's bank. Number 3, it is banker to the government. It is the banker to the commercial banks, to cooperative banks, to scheduled banks, but it is also the banker to the government. The government's bank is RBI. It manages public debt. Government takes loan from the RBI, right? This is how it works. Government takes loan from the RBI. It manages public debt. It transacts general banking of central as well as state governments. Like banks are not having accounts in your ICICI Access Bank, right? The governments are not having those accounts. Governments are having accounts. They have transactions through RBI, right? So RBI is actually the bank of the government. It sells treasury bills on behalf of government. Government wants to raise money from the public, right? There are government bonds, there are government treasury bills, right? The government wants to take money from the public, so it issues bonds, it issues treasury bills to the public. People buy that, they get an interest for that bond, right? For example, government says you buy bonds for 1,000 rupees and I will give you an interest of rupees 100 every year, right? So who issues this bond? Where does that money get stored? It is with the RBI, right? So because it is the banker to the government. For government's bonds, for government's treasury bills, RBI is the bank that actually transacts, right? As simple as that. Like you have bank, your salary comes into your bank, or your money comes into bank. You do an FD with your bank. You discount your bills or treasury bills or your debtors with the bank, right? Similarly, for the government, RBI is the bank. As simple as that. It makes advances to central as well as state government. Because it is banker to the government, banks take loans from the RBI, right? Advisor to the government on financial as well as economic issues. We discussed in the role as well. It actually advises government on what is right for it, what is wrong for it, what they can do, how they should do, right? So RBI had a big role in demonetization. If you remember demonetization, right, there was a huge role of RBI issuing new currency, whether it be fruitful, whether we should go for it. So there was a huge discussion and advisory from the RBI to the government to go for demonetization, right? So that is where RBI helps the government, advises the government, right? Issues currency, it is banker to the banks, it is banker to the government. 4th, it is custodian of foreign exchange. Now, foreign exchange of the country is the responsibility of RBI. As simple as that. Government gets foreign exchange. It is the responsibility of the RBI to check whether it is legitimate, whether it is correct black money, correct your foreign exchange, whether it is fraudulent black money or not, right? So everything is checked by RBI, regulated by RBI, right? Foreign exchange reserves of the country are a responsibility of RBI, right? So RBI is concerned with fluctuation of your rates, INR going up, dollar going down against Swiss franc, against Chinese yuan, like Japanese currency, right? So all this is actually the responsibility of RBI. The rate fluctuation, the foreign exchange fluctuation is the responsibility of RBI. Custodian, the responsible person, responsible institution is custodian, right? It is the responsibility of the RBI to take care of foreign exchange of the country. Right? 5th function is controller of credit. What is controller of credit? Like how much loan should be given? What is the capacity? What should be the capacity of the bank to give out loans? Which sector should get loan? How much loan particular industry should get? What is this loan? How should Are the loans being repaid, whether it has become an NPA, non-performing asset, whether the bank is going bankrupt, whether it is functioning in the right way. It is the controller of credit. It controls how the loans are given in the economy to the businesses by the banks. It controls credit in the country, right? It is the controller of the credit. It regulates the purchasing power. The more loans are given in the economy, the more people will spend and more will be the purchasing power of the economy, right? So it actually regulates purchasing power. How? More loans are easier, less interest loans are given in the economy. People will get more loan. People will take more loan. They will start spending more. Thus, the purchasing power goes up. If the interest rate of the loan is higher, people will not take more loans. When they don't have loans, they will not spend more, right? Because they do not have money, right? So that is why the purchasing power goes down. This is how RBI controls credit, and it controls the purchasing power of the people in the country, in the economy, right? Okay, last two small functions, promotional functions, right? So RBI says like you should go more digital, like digitization of money, use more digital money like Google Pay, go for net banking, go for more of digital money, right? Accept money over digital wallets, go for UPI Bheem, go for this, like less of cash, so that it is more tracked, so that it is easier to understand where the money is coming from, where the money is going, right? So that is why it is promotional function. It promotes digitization of money, mobilizing of savings. It says save more, or it says spend more, as is the need of the economy. So it has a promotional function, right? Collection and publication of data. So RBI also collects and analyzes the statistical data for policy implementation, right? This is the sector which needs loan, or this is the industry which needs loan. These are the industries which are not paying loans. So stop giving loans to these industries, or this is what the purchasing power of the country should be. This is how the foreign exchange rates are fluctuating. So it gives out all this data on its website for policymakers, for businesses, for banks to see and develop their business, right? If you see that the money is becoming stronger, I as a business would want to export more because I will get more money out of it, right? So it is collecting and publishing data on its website, which is useful for businesses, for banks, for government, for different organizations. So it has a function of collection and publication of data as well. Okay. Quick revision of 7 functions of RBI. Issuer of currency, issues currency. It is the sole authority that issues currency. It is the banker's bank, right? It is the banker to the government. It is the custodian of foreign exchange. It is responsible for foreign exchange. It is the controller of credit. It controls loans and credit in the economy. It has promotional functions, promotes digitization of money, go for digital India, digital money, digital wallets, collection and publication of data, so that it is easier for businesses to decide what to do, like how to go about it. Shall we get more loans, or is it easier to get loans? So for banks to understand which industry or which businesses should be given loans, right? I will take up questions now. I think there are a lot of questions, and then we will move on to the next topic. Till then, most of you who are clear with the concept can revise these 7 points quickly, right? Okay. Kushi, every currency is issued by RBI, right? No, everything is issued by RBI. I think there is a discrepancy on the 1 rupee note and coins. Well, that is a general knowledge thing. Like, even if you think that's comes under the Ministry of Minting, that's another sector, another thing that mints money, right? One of the biggest minting facilities is in Pune, I believe, right? It's in the suburbs of Pune. Okay. Right. Okay. I'll take up questions which are more on the concept, and then we'll move on to the next But repo, reverse repo, CRR, SLR we'll discuss right away in the next few slides. So be assured. Correct. Yes, treasury bill can be by both central and state government. Generally, it's by the central government. Okay. Non-performing assets are actually businesses which are not repaying their loans, right? There is a time frame that after that time frame, if they're not paying their money, they become non-performing assets. Okay. Yes, export and import, a lot of regulation is done by RBI. So there are a lot of forms you have to fill with RBI for export and import. Absolutely, yes. We'll come to CRR, SLR. Okay. Isabella, you can ask your questions on virtual classes at ici.in, or you can also post your questions here. We'll try to answer each one of that. If you have long questions, conceptual questions, please shoot your questions to virtual classes at ici.in. We are working day and night to answer most of those questions. There are delays, I know, but then again, we are trying to answer each one of that. And surely by next weekend, like I am assuring that we'll answer most of the questions, right? Okay. Got it. Got it. Okay, let's move on to the next topic. The business. We understood what the RBI is responsible, that is the role. How does it how does it impart its role? How does it actually work on its role is through its functions that we just saw. These 7 functions is what does it do so that it fulfills its role, right? But how does it facilitate the business, right? There are 4 things. There are 4 things that how it facilitates businesses in India. How does RBI facilitate, it supports businesses in India? How does it actually affect the businesses, right? Number 1 is currency policy. Just we saw that it issues currency. So currency flow in the country, adequacy of currency for economic activities, right? If they're adequate, if there is sufficient currency in the economy, it is easier for businesses to do business, right? It is easier for consumers to pay. It is easier for businesses to take that money and grow, right? So adequacy, sufficiency of currency is actually one of the biggest things that actually helps businesses. It supports businesses in the economy, right? If there is sufficient currency, it is easier to transact, buy and sell, right? And then we had demonetization and remonetization through currency policies, right? All those businesses which were actually doing businesses which are illegitimate, right? Terrorism, or we had fraudulent practices or black money, either in different industries, right? So through currency policy of demonetization and then remonetization, bringing in new money, right? New currency. So this is how it actually benefits the businesses who are actually doing legitimate business, right? They got benefits because those who were doing like illegitimate businesses, fraudulent businesses, they were actually into a trouble. They went into a trouble, and that actually helped the businesses which were legitimate, which were actually doing the right thing. They got an edge over those businesses, right? It was easier for them to flourish. That is why it is facilitating those businesses. Then foreign currency. For exporters and importers, it helps to regulate foreign exchange, right? It helps to regulate INR versus USD, INR versus different currencies, right? So it actually, its policies, its functions, its role actually facilitates importers and exporters in the economy, right? So via currency policy, it facilitates businesses. Second is payment mechanism, right? Paper-based, and now we have the digital payment mechanism. So RBI is actually promoting this, the promotional function. Through payment mechanism, it looks after various availabilities and the appropriate functionality within rules, right? UPI being, digital wallets, the KYC, even in Paytm, even on Amazon Pay, you have to go and do a KYC. Know your customer, know your client, right? KYC. That is what is mandated, regulated by Reserve Bank of India, the payment mechanism. It controls the payment mechanism, it regulates, it looks after the payment mechanism so that so that it is easier for businesses, right? It is legitimate. It is as per the law of the land. There is no fraudulent practice. That is why through payment mechanism, through digitizing the economy, it is actually helping the businesses, right? You can actually pay. There is no delay, like this note is torn, or I don't have the appropriate money. If you have to pay 23 rupees, let's suppose like we had to pay 23 rupees, it is really difficult to get those 3 rupee coins, or the shopkeeper gives you 7 rupees back. So you either had to pay 30 or 25, or the shopkeeper had to pay back 7, or he said, let's go with 20 rupees. Through digitization, you pay the exact amount, right? So ease of business, ease of transaction, either also for the customer, also for the business, through payment mechanism, right? Credit cards, online payments, digital payments app. The payment mechanism regulated and promoted by RBI is actually facilitating businesses, right? Third is develop. It develops financial system. How? Currency flow, credit flow, payments, right? Consolidate everything. It is developing a financial system, right? It is trying to curb black money, stop black money flow in the economy through digitization, through educating customers to to take bills, through different organizations. It is an umbrella organization, right? So through different initiatives, through different advertisements, promotion, through digitization of economy, then uplifting the priority sectors, giving loans to agriculture, MSMEs, cooperative banks, small entrepreneurs, women entrepreneurs, right? So common citizen, we are able to transact with ease, get loans easily. So it is actually developing an entire financial system through its functions and roles. Through its function and through its roles, it is actually developing a financial system that is bringing about an ease of business, that is bringing about easy growth of business. That is how it is being a business facilitator. It is facilitating business in the economy, right? Okay, and the final one, and the final business facilitator is credit policy. It is making loans available. It is making loans available to the businesses, right? I think most of you are saying the coins are not issued by RBI. So I guess, yes, the coins are not issued by RBI. I was also just side by side reading. So yes, the coins are not issued by RBI, but then again, the major currency, right? The major currencies are, that is your 5, 10, like 20, 50, 100, 500. So the idea is to understand that RBI is issuing currency. Rather, let's not focus on whether the coins are issued by the RBI or not, right? The idea is to understand that RBI is facilitating that, right? Either it's not issuing or not is not the question. The question is to understand the concept, right? The RBI is actually the umbrella organization which has multiple functions rather than just the currency, right? Credit policy, developing financial systems, looking after banks, right? So that is how the RBI is actually facilitating businesses, right? So credit policy, we were talking about the final business facilitation activity from RBI, that is credit policy. So remember, it is non-funding, right? So it is not giving out money to the businesses, but it is ensuring that businesses get money via banks, right? Through banks. It is actually facilitating, developing, regulating, supporting, helping the banking system to give out loans, right? So that is how it is helping in credit policy. And a small reduction in SLR, that is statutory liquidity ratio, and CRR, that is cash reserve ratio, can result in huge disposable funds to be given out as loans by the banks. What does this mean? A lot of you have been facing problem in understanding or want to understand quickly what is SLR or CRR, right? So just keep this statement with you that a small reduction in SLR or CRR can actually result in huge disposable funds, means huge amount of funds to be given out as loans by the banks. How? We will discuss it right away, right? Okay, let me see if I have, got it. Okay, so RBI is, yes, it's giving loan to the government, it's facilitating the government, it is facilitating the banks, it is a banker to the government, it is a banker to the bank, right? Okay. Got it. I see a question. Wonderful. Okay. I see I've covered that part. The finance ministry under Indian Coins Act. Okay, perfect, perfect. Thank you everyone who said that, who is issuing coins. Really glad you're studying the study material, right? It's good. Don't rely just on the presentation. It's more our conversation, understanding the concept, right? While, as I keep repeating, you will get the in-depth knowledge of everything from the study material, right? So the idea of my sessions is to have a conversation and understand what this entire chapter, this entire syllabus of PCK is about, right? Okay. Let us see if I have questions, and then we'll quickly understand these wonderful concepts that most of you want to understand, right? Okay. Right. So just as I said, it's easier to transact money digitally, right? Okay. Bhumika, it's RBI doesn't actually provide money. It's more on a mortgage, right? It is actually assisting. It is not actually a perfect loan, but it is a setup where it is assisting the government, right? So this is something very technical when you understand this entire concept you read about in the economy. But the basic concept is actually not providing hardcore money like banks give you loans, right? It is more on assisting through treasury bills, issuing of treasury bills or issuing of bonds from the government. It gets money and then it assists the bank or the government, right? Gets money from the foreign and then assists the government, right? It is actually creating an environment and facilitating that money, right? Wonderful. Well, a good question from Himanshu. He says, why is RBI not issuing more currency to fight the economic problems? Because that will lead to inflation, Himanshu. Simple concept. If you have more money in the economy, there will be inflation. And when there is inflation, right, when there is huge inflation, there will always be a drop. It has to be controlled, right? Okay. Now let us quickly dive into the basic 5 concepts that we need to understand in this chapter basis RBI, related to RBI, right? First is basis points, second is repo rate, third is reverse repo rate, fourth is SLR, and fifth is CRR, right? So let us begin right away with basis points. What is basis points? Interest rate is referred in basis points. As simple as that. Interest rate is referred in basis points. 1% is equal to 100 basis points, right? 1% is equal to 100 basis points. Now, if the bank interest rate is 7.75%, let us suppose that bank interest rate is 7.75% and RBI tells that you have to reduce it by 25 basis points, right? You have to reduce it by 25 basis points. 1% is 100 basis points. So 25 basis point is 0.25%, right? Simple maths. 1%, 100 basis points, 25 basis points, RBI says the current rate is 7.75. You have to reduce it by 25 basis points. That means 0.25%. You have to reduce the 7.75% by 0.25%. The new interest rate that the bank can charge is 7.5%. As simple as that. This is basis points. It is referred in, interest is referred in basis points, 1%, 100 basis points, right? This is basis points. Second, repo rate, right? RBI is the banker of the banks. We just studied RBI is the banker of the banks, correct? Now, rate at which banks borrow money from RBI is called repo rate, right? Now, rate at which banks borrow money from RBI is called repo rate, right? The full form is repurchase rate. The full form of repo rate is repurchase rate. Rate at which banks borrow money from RBI is called repo rate, right? It is a short-term borrowing. The repo rate is actually very short-term, right? Currently in India, the repo rate is 4%, right? So banks can borrow money from RBI at 4%. That is the repo rate. As simple as that. RBI is banker of the banks. The rate at which banks borrow money from RBI is called repo rate. Now, what is reverse repo rate? Now, RBI is the banker of banks, right? The rate at which banks deposit money with RBI is called reverse repo rate. Simple. Now think of you as a bank and your ICICI Bank as RBI. Okay. Now think that your ICICI Bank is RBI, and you are the actual bank, right? Now, when you go and take loan from ICICI, they tell you that the loan interest rate is, let's suppose, 12%, right? So this is repo rate. The money at which banks borrow from the RBI is repo rate, right? Now, the bank says, this is my money, invest it with you, give me interest. I am giving you money to keep with you so that you can assist governments, so that you can actually keep a reserve of money with you for the country, right? So here is my money, keep it with you, but give me interest against it. That is reverse repo rate, right? Rate at which banks deposit money with RBI is called reverse repo rate, right? So currently it is 3.35%. Now banks can borrow money at 4%, and when they deposit, they get 3.35%, right? Which is obvious, right? They will get less than what the RBI would charge them. That is how banking system works, right? It is similar to how you get interest in your savings bank account or your fixed deposit, FDs, right? That is exactly what the reverse repo rate is between the RBI and the bank, because RBI is the banker of the banks, right? Okay. Final two major things are SLR, that is statutory liquidity ratio, and cash reserve ratio, right? So SLR, statutory liquidity ratio, it is the ratio of liquid assets to total deposits with bank. Like, this is so technical. How do I understand this, right? How do I understand this? The simple explanation I've given it here in blue. If you see total deposits, right? All these banks, all these commercial banks, all these nationalized banks, ICICI, HDFC, Axis Bank, all these banks actually have deposits from the people, from the public, right? All of you have money in the banks, your parents, your relatives have money in the banks, in savings bank or in fixed deposits, XYZ accounts, PPF account, that account, right? So all these people have deposited money with the bank, right? And this money is actually used to give out loans to the businesses, right? This is how it works. You have money in your savings bank or FDs. This total deposit with the bank is used to give out loans to the businesses, right? Now SLR, statutory liquidity ratio. This means, statutory means as per law, liquidity means readily available cash. Liquidity means liquid assets are assets that can be converted to cash very quickly, right? That can be instantly converted into cash, like securities of government, time deposits like FDs. You just break an FD and you get the money in the bank, right? You have a security of government, you sell it right away and you get the money, right? So statutory, that means needed by law. Statutory means by law, liquidity ratio. Certain amount of money that the bank has to keep as liquid, as assets that can be converted to cash. That is the liquidity ratio. Statutory means required as per law. So SLR requires to keep certain percentage of these total deposits as liquid. Liquid means readily convertible into cash. Why? Why should the bank actually keep this money as liquid? Because imagine the people have kept this saving account or FD in the bank. Now if certain group of people come and say, give me my money, I want to encash my money, I want to remove my money from one bank and take it to another bank, I want to break my FD and take the money out, right? The bank should have the money to give to those people, right? So that is why a minimum percentage of these total deposits should be kept as liquid. Liquid means readily available, convertible into cash. Readily convertible into cash, right? Currently, 18.5% of the total deposits with the bank are to be kept as liquid, are to be kept in liquid form, means that can be converted into cash very quickly, right? Why? So that if people come and ask for their money back from the bank should have certain amount of money with them to give them back, right? So that they don't say, we don't have money, we will not be able to give your money. That will actually bring down the faith of people in banking system, and that is what RBI does not want, right? So RBI wants that people should be able to get their own hard-earned money back, and that is why out of the total money deposited in bank, certain percentage should be kept as liquid, that is readily convertible into cash. Statutory liquidity ratio, as simple as that. This is statutory liquidity ratio, SLR, which is currently 18.5%, right? Now, what is cash reserve ratio? Now, this is exactly same thing, right? Statutory liquidity ratio talks about keeping 18.5%, certain percentage of the total deposits as liquid assets, readily convertible into cash. But it also requires the banks to keep certain percentage as cash itself, right? As cash itself. So total deposits can be used to give out loans, like we discussed. CRR, cash reserve ratio, requires to keep certain percentage of these deposits as liquid in form of cash, right? It has to maintain on a daily basis. This has to be maintained on a daily basis. So banks send RBI a report on a daily basis that yes, we have around 3%. Currently, it is 3%. So around 3% of the total deposits that I have as a bank, I have kept it in cash form. I have those 3% in cash, so that if anyone comes and wants that money back, I can give that money back to the people in form of cash, right? So SLR is to keep the percentage of total deposits in form of liquid assets, and cash reserve ratio is to keep the percentage of total deposits in cash. That is the only difference. The essence, the concept, the logic is exactly the same, right? Now I'll come back to this statement I said. A small reduction in SLR and CRR can result in huge disposable funds to be given out as loans, right? Now suppose a bank has 100 rupees with it, right? Now it has to keep 18.5% as SLR and 3% as CRR, right? Which is equal to around 21.5%, okay? So around 21.5% of this 100 rupees, it has to keep as liquid assets and cash. This means out of 100, 21.5 rupees, it cannot give out as loans, right? It has to keep that money readily available if people come and ask for that money as per RBI, right? So 21.5% is to be kept with the bank, and rest money can be given out as loans to businesses, right? Now, if RBI says reduce this 18.5% to 1% and zero cash reserve ratio, now 99% of the money can be given out as loans, right? So a small reduction in SLR and CRR can result in huge funds to be given out as loans by the banks, right? I hope you get the concept. If you have any questions, I'll take up the questions and then we will move on to the next part, right? Okay. Okay, Varsha, how is RBI calculating that? Well, that is a high-end calculation. That is a high-end like economics, statistics. A lot of education, a lot of thought goes into that. Like there is no straightforward formula for that. That really depends on how the economies function. That is why the governors of RBI, the officials of RBI, are highly educated, economists with 20-25 years of experience, right? That is what they're good at. You, me, cannot actually even understand like why it is 18.5. There are logics, but then again, it's a huge thought process. It's a huge like economy wide. You have to think about 130 plus crore people of the country, right? A GDP of around $3 trillion is what you have to take care of. Hmm. Okay. Moksh, I think remonetization, you can go back to the sessions. These are up there on the YouTube. You can actually revise that. And similarly, if you want, I can explain reduction in SLR as CRR. So simply what I mean to say is SLR and CRR, if it is reduced, right? Right now, if it is 18.5% SLR, that means rest of the money out of 100% to 18.5% is to be kept as liquid. Rest of the money can be given out as loan. But if I reduce that percentage to, let's suppose, 5%, 95% of the money can be given out as loan, right? So reducing the SLR and CRR can actually allow banks to give out more loans to the business. More loans means more money in the economy. So they have to regulate, right? So that there is no problem to the people who can come and ask for the money, right? Plus, there is also not problem to the businesses. So that is a very huge thought process, right? Right. Liquid assets, I just gave you example like time deposits, or we have government securities, treasury bills, discounted bills, right? That can be easily converted into money. You go and you present a bill or a treasury bill, and you can actually convert that particular thing into money, into cash, into bank, into actual bank, right? You get that money in your bank instantly, right? Time deposits like FDs or short-term deposits, or you have bills, right? Short-term bills of money that you can convert and get that money readily available in your bank. Okay. No, LRR is a different concept. Like LRR is more concerned about the currency flow, the monetary part of it, right? We're talking about the credit part here, the money available with the banks. LRR is something which is to do with monetary policy, which is to do with currency flow in the economy, right? Okay. NBFCs are non-banking financial corporations. As the name suggests, they're not banking companies, but they are there to give loans, give credits to businesses, right? Okay. Yes, maintaining SLR and CR leads to credit creation. Absolutely, yes. If it goes up and down, it helps in creating less or more credit, right? Discount rate is actually what we can say is interest rate in the layman's language, where there are a lot of things like discount rate is actually something you can actually discount it. You'll get that money like 2% discount rate, 5% discount rate is actual discount that you get. You pay 100 rupees at 5% discount means you pay 95 rupees, you get 100 rupees, right? So that is how discount rates work. Well, SLR is to be maintained on a constant basis, right? It has to be maintained on a constant basis. Yes, liquid assets can be in the form of gold too. Yes, you can sell gold and get money. Okay. I think LRR I answered. Got it, got it. Yes, there was a change in repo rate due to COVID-19. Absolutely, yes. Now that you know the concept, you can actually think like, why is government actually dropping or actually increasing repo rates or SLRs or CRRs, right? Now you will, when you look at these numbers, when you read the newspaper, you will get to know why is actually this happening. Earlier, you would just say, okay, the repo rate has reduced or it has increased. But now you will understand why that happened, right? Why did that happen? Because either the credit has to be increased or the disposable income of the people has to be increased so that they spend more, right? So that the economy comes back to its normal cycle, right? Okay, wonderful. Quick quiz on the screen and then we will cover another another institution very quickly. We're running short of time. This is a huge chapter, right? Okay, question number 6 on the screen, everybody. All scheduled banks are required to maintain a certain minimum cash reserve ratio with the RBI, right? We just discussed all scheduled banks are also required to maintain a certain minimum cash reserve ratio with the RBI. This provision enables RBI to ensure what? Why is there CRR? Why is there CRR? Why does RBI wants a bank to have a minimum cash reserve ratio, right? Is it one for a forex rate fluctuation, for credit position of the country, for savings of the people, or collect public data of money held by the public? I think it's a concept based question, and this is what I want to focus more on, right? We are done with easy questions. Who is what? Who did what? When did that happen? Let us go to the concept part. All scheduled banks have to keep CRR. Why does RBI want banks to keep a CRR? Is it for forex rate fluctuation? Is it for credit position? For savings of people? Or is it to collect public data of money held by the people? Let us see who can answer that. Satvik, I will pick your question absolutely. Let me see if I can find your question. Where is the main branch of RBI? The headquarters are in Mumbai, right? Is that your question? Inflation, the continuous rise in prices of goods is called inflation. You can say so. Yes, absolutely. One of the what I can say symptoms of inflation, right? One of the results of inflation is that prices keep increasing. If that was your question, Satvik, I think I've answered that. Okay. Satvik, I hope I've answered your question. Try to answer each one of you. Be assured. Okay, I see a lot of you have answered already. Wonderful. Right, Satvik? I think I've answered it. Okay, we have answers from Reena, Khushi, Kalyani, Sia, Ankit has given, Sakshi has given, wonderful, Aditi, Vanshika Pratham has given, Bhumika has given, right? Sabrishwari has given, wonderful. Ishita, good. Gayatri has given, nice. Rashmi has given. We have answer from, okay. Right, okay, we have answer from Satvik, we have Preeti, Aditi, Darshika, wonderful. Okay, how many branches of RBI? Well, I think I'm not very sure of that. Well, I'll be honest, I'm not confident on the answer. We can Google that for sure, right? I wouldn't want to give you a wrong answer. Okay, deficit financing also leads to inflation to some extent, yes. To some extent, yes. Okay, quickly, we will go to the answer. It is credit position of the country, right? Credit position of the country, because that is how it is actually maintaining credit in the country, right? Just give me a second. I think give me 10 seconds, please, and I think I have a question. Give me a second, please. Got it. Okay. Got it. Bhumika, you will have to rephrase your question. Difference between bank rate and what, right? There have to be two things when we have to differentiate, right? Okay. Got it. Okay. Okay. I will come to all the questions. Let us just focus on the concept and then I'll come to the questions. Be assured. Right? The second non-funding institution, government institution that we're going to talk about is SEBI, right? Securities and Exchange Board of India. We have completed RBI. We have got the concept of RBI, right? So this is what we are going to discuss now. SEBI, Securities and Exchange Board of India, right? RBI was Reserve Bank of India. Now we're coming to the second institution, which is Securities and Exchange Board of India, right? Okay, Securities and Exchange Board of India was established by the Government of India in 1988 and is given statutory powers in 1992 with SEBI Act of 1992, right? SEBI was given powers under SEBI Act of 1992, Securities and Exchange Board of India, right? Controller of Capital Issues, right? Controller of Capital Issues was the regulatory authority before SEBI. So before SEBI came in 1992, in 1998, right? But the powers were given by the Act in 1992. So before SEBI, we had Controller of Capital Issues, right? So SEBI was established by government under SEBI Act of 1992, right? Now let us understand how is SEBI actually organized? Who is on the board of SEBI, right? Who is actually there on the board of SEBI? The first is the chairman, right? The number one person in the SEBI is the chairman. Chairman is appointed by the government or by the central government, right? The chairman is appointed by central government and he or she shall be a person of ability, integrity and standing in the field of securities market, law, finance, accountancy, economics, administration, etc. Right? A chairman is appointed by central government who is a person of integrity and standing in the field of law, finance, accountancy, economics. He should be a well-educated and well-known person in this field, right? Appointed by the central government. The head is chairman. Second are two members, right? Two members amongst the officials of Ministry of Central Government, right? Dealing with finance and administration of Companies Act 2013, who shall be nominated by the central government, right? Two members nominated by central government who would look after the finance and administration of the Companies Act, right? So two members nominated by the central government are in the board. We are talking about who all are in the board of SEBI. Chairman appointed by the central government, two members nominated by the central government who would look after dealing with finance and administration of the Companies Act 2013, right? Chairman appointed by the central government, two members to look after the Companies Act and the finance and administration related to Companies Act, nominated by the central government, right? One member from amongst the officials of RBI, one member from amongst the officials of RBI who is nominated by RBI, okay? One member from amongst the officials of RBI who is nominated by RBI, five other members, at least three members shall be whole-time members, right? Five other members appointed by the central government, at least three of them should be whole-time members, right? They should be dedicatedly working with the SEBI as a board member, whole-time members, right? Appointed by the central government and shall be person of ability, integrity, standing in the field of securities market, law, finance, accountancy, economics, administration, etc. Same like the chairman, right? One chairman appointed by the central government, two members nominated by the central government to look after finance and administration of Companies Act 2013, one more member from officials of RBI nominated by RBI, five other members appointed by central government, at least three of these five should be whole-time members. Simple. One chairman, two members nominated by the central government, one member from the RBI nominated by the RBI, five other members appointed by the central government. Simple. Board of Securities and Exchange Board of India, SEBI, right? Okay. Now, what is actually SEBI doing? Like, we understood who is on the board of SEBI, but what is actually SEBI doing? Why is SEBI there in India? Why do we even need a SEBI, right? Number one, to protect the interest of investors in securities. Securities are shares, securities are bonds, securities are non-convertible debentures, NCDs, right? All those money, all those share market related securities, right? all those share market related securities are there in the share market, and to protect the interest of the investors, people who are investing their hard-earned money in these securities on the stock exchange, right? Securities and Exchange Board, stock exchange, right? To protect the interests, of these investors in securities, we need SEBI. We need SEBI to protect the interest of these investors. We need SEBI to promote the development of this share market, of the securities market, of the debenture market, of different securities, futures, options. We will study all that in further levels of chartered accountancy, right? Strategic financial management. That's a wonderful subject to study, right? But all those things, futures, options, shares, debentures, right? In the securities market, we need SEBI to promote the development. We need that to develop such markets so that more people, more businesses, think from a business perspective, more businesses can come and take money and pull up money from the securities market, from the public, right? To develop such securities markets so that companies can actually get funds from the securities market. Third, to regulate the securities market. It develops the security market but regulates so that someone is not actually indulging into a fraud, into a wrong practice, misleading the investors, right? To regulate it, to check it, to keep a control on it, right? So SEBI's responsibility is to protect interests of the investors, to promote the development of securities market, and to regulate, keep a check, to control the functioning of securities market, right? And for related matters. For anything that relates to all these three responsibilities is also a responsibility of SEBI. As simple as that, right? Protect, promote, regulate. Protect, promote, regulate. Simple as that, right? Okay. Now SEBI has to be responsive. SEBI has to be responsive to the needs of three groups. Based on these responsibilities, it has to take care of three types of groups of people in the securities market, right? Based on these responsibilities, it has to be responsive. It has to take care of three groups of people, the needs of three groups. Number one, issuers of security, right? Companies who are actually issuing shares, who are actually issuing debentures, who are actually having options and futures, who are actually there in the stock market, who are actually getting funds from the share market, right? Issuers of securities. That is, they have to cater, they have to understand the needs of the issuers of securities. Second, the investors, the people who are buying those shares, who are investing their hard-earned money in those shares and debentures, in those securities, right? And the third is market intermediaries, brokers and mutual funds, right? We have brokers who actually facilitate, who actually help us to buy shares, who actually help us to sell shares. We have mutual funds who actually help our money to grow or to fall as per the risk of the market, right? The investment in mutual fund is subject to risk. You have that like long line, right? So help to regulate and understand the needs of this market intermediary, the brokers and mutual funds. So SEBI has to understand the needs of three groups of people. Companies, public companies who are actually issuing securities in the market, people who are investing in those securities, the investors, and number three, the intermediaries who are actually helping buying and selling of these securities, right? Okay, I'll take up a few questions very quickly because we'll be short on time then. Okay, why was SEBI formed? For this very reason, Saurabh. Okay. Got it. Sine qua non means essential, right? Sine qua non means it is essential. You need it. It is mandatory. You will need it. That is what this phrase means, right? Sangam, what is preference shares? I really request you keep these questions for the next session because I think we'll cover that in the next session in depth, right? I have questions. We'll complete this chapter as well. And we'll have questions based on chapter 5 and chapter 4. We'll have a healthy economic discussion there. On Monday, I have the next session and we'll discuss all that and that. Let us focus on the role right now and the responsibilities of SEBI, right? Okay. Integrity means of good standing, like person who is well known, who is known to be good in terms of business, right? Who is known to be truthful, who is known to be honest, right? That is integrity, right? Okay. Now, three functions of SEBI. What are the three functions of SEBI? Number one is quasi-legislative. Second is quasi-judicial, and third is quasi-executive, right? Quasi means it is actually not the legislative business, but it looks like a legislative function, right? Quasi means it is not in real terms, but it looks like it, right? So I can say that quasi-legislative is this function looks like it is a legislative function of SEBI, but it is not actually a legislative function. That is why we say quasi-legislative, right? So the quasi-legislative is SEBI drafts regulation in its legislative capacity, right? It cannot create a law. It cannot create a law itself, but it helps in drafting regulations, right? That is why quasi. It looks like a legislative function, but actually it facilitates, it helps in that, right? So SEBI drafts regulations. It drafts rules for stock markets. It drafts functions, what should be done, how should be done, what is the percentage of that, what is the percentage of shares you can do, what is the percent of shares that can be preference shares or that can be normal shares, right? That is what the SEBI can do. It can draft regulations. It can draft rules related to stock exchange and securities. Quasi-judicial. SEBI passes rulings and orders in its judicial capacity, right? As per SEBI Act, it has some powers to punish and fine some fraudulent activities or some wrongdoings, right? So under that act, under the powers as per that act, it can pass rulings and orders in its judicial capacity. That is quasi-judicial, right? Judicial means judgment, punishment, like court. So under its powers as per the SEBI Act, it can also pass rulings for punishment, right? That is what it can do. That is quasi-judicial. Third is quasi-executive. That means it conducts investigations and enforcement actions in its execution function. It conducts investigation when it finds there is something wrong, or some share is misleading the public, or some information in the market is misleading the public. So it conducts investigations and enforcement actions. That is what it can do, right? As a quasi-executive function, SEBI can actually conduct investigations. Legislative, judicial, executive. Three functions of SEBI. Legislative is it makes rules, right? Judicial is it passes rulings and orders, punishes the judicial as per the act, the powers it has as per the act. And the executive, quasi-executive, it investigates and it enforces actions in its executive function, right? That is what SEBI can do under its three functions, right? We studied about SEBI's board. We studied about the responsibility of SEBI, protect, promote, regulate. Then the three groups it needs to cater to issuers of currency, investors, and market intermediaries. And the three functions of SEBI, it can make rules, it can pass rulings and punish the wrongdoings, and it can conduct investigations. Three functions is what it can do to protect, promote, and regulate. To protect, promote, and regulate, it makes rules, it passes rulings and punishes as per the powers it has, and it conducts investigations to protect, promote, and regulate, right? I think that really relates two things, the responsibilities with its functions, right? What it is supposed to do and how does it do. Responsibility and role is what is it supposed to do? Why is it actually there in India? Why is it actually there in the economy, right? That is the role and responsibility. Function is how does it do, how does it cater to that role? How does it impart that responsibility is what the function is. To protect, promote, and regulate, it can make rules, pass rulings, punish people, and conduct investigations, right? Okay. Nominated and appointed is, it nominates, like I nominate you to be the president, right? But you're not actually appointed as the president. But I'm just suggesting, I'm nominating that from central government, if anyone has to be selected, this is the person who should be selected, right? That is nominated. Appointed is this person will only be selected. That is appointment, right? Okay, legislative means related to rules and laws, right? SEBI drafts regulations, rules, policies, right? That is legislative, related to law. Your Lok Sabha is legislative. We have, if you see MLAs or legislative assemblies of your state, right? So legislative assembly is a place which is actually making rules and laws, right? Legislative assembly, member of legislative assembly, MLA. Legislative is making rules and laws. So that is what legislative is, right? Okay. Preamble is something by which the entire structure works, right? Preamble is something which gives an idea what the organization wants and it does, is preamble, right? The beginning document, right? Okay. Securities Appellate Tribunal is where people can go and appeal against anything, anything that the SEBI rules, right? So if SEBI passes or says you are punishable, they can go and challenge SEBI in Securities Appellate Tribunal, right? Okay, let us quickly move on to understand from a business perspective, right? From a business perspective, how does SEBI actually facilitate business, right? How does SEBI actually facilitates businesses? Number one is development of India's capital market. As simple as that. When the market is developed, more companies can go and issue their shares and securities in the market, right? When the India's capital market is developed, more companies can go public, more companies can go and issue shares and securities in the market so that they get funds and they can grow, they can expand, right? So the basic business facilitation by SEBI is that it helps in development of India's capital market so that more companies can issue shares and securities to get more money from the public and to expand and grow, right? Second, it facilitates overseas entities, the foreign companies who are desirous of participating in Indian capital markets, right? It actually facilitates foreign investment in India and vice versa, India investment outside, right? India is investing in Mauritius, India is investing in Sri Lanka, India is investing in Japan, India is investing in South Korea, right? There are different ways that are being done. So it facilitates on different stock exchanges, different securities. So it actually facilitates, it helps, it supports, it makes rules, it promotes, it actually regulates, checks that everything is done in the right way, right? So it facilitates overseas entities who want to invest money in India and vice versa. Indian companies, Indian people, individuals or organizations wanting to invest outside. It helps in that, right? Third is it is responsible for investors' faith, right, in the functioning of the capital market. So when the fraudulent companies or companies who are giving misleading information in the market, those are punished. Those are actually put behind bars, or that those are actually banned from security markets. That actually increases the investors' faith in the securities market. That yes, if I'm investing money here in shares, in debentures, my money is safe. It is risky, depends on demand and supply, but it is safe. There will be no fraud, right? So it is responsible for investors' faith. It is responsible for investors' faith, right? That is how it is facilitating businesses. That is because investors' faith is there, so investor will invest more. When investor invests more, the businesses have more money to spend, to expand, and to grow, right? That is how it is facilitating business, and it is a non-funding institution. SEBI is not giving any money. SEBI is not giving any money to anyone. It is a non-funding institution, right? That is what SEBI is. Question on your screen, everybody, right? Which of the following does SEBI not cater to? Which of the following does SEBI not cater to? Is it investors, intermediaries, government organizations, or security issuing companies? Which of the following does SEBI not cater to? Absolutely, yes. It does not have any legal functions, but it can apply functions. Yes, it can. It has the power as per the Act. So underwriting function is actually when, let's suppose, I issue 100 shares, right? I issue 100 shares, but people only bought 80 shares. But as per rules, there is a minimum number that 90% of the shares should be sold, right? Only then you can be listed on the stock exchange. So the balance 10 shares are actually bought by SEBI or is assisted by SEBI through banks, right? So that is what underwriting is. That is what underwriting means. Quasi can actually mean partial. It's one of the synonym, but partial is quasi is more like, yes, a part of it, right? It is not in real terms, but it is a part of it, right? Somewhat, if you can say quasi, somewhat legislative, somewhat like other functions. Wonderful. I think most of you got it correct. And the concept is clear, right? What is SEBI actually doing, right? That is what the idea is. That is what is actually SEBI doing. Okay, the correct answer is government organizations, right? The correct answer is government organizations. Wonderful. 99.99% of you got it right. So wonderful. Okay, so before I go to CCI, I think we are short on time. So what I'll do is we will cover the next three topics, that is CCI, your IRDAI and your NABARD, right? We will cover these topics in the next session in another like 30, 40, 45 minutes, I believe we'll cover that. And then we will have a full-fledged revision of chapter 4 and 5. I'll bring about tough questions. I will have all those doubts you have from chapter 4, all those MCQs, right? We will discuss all the MCQs of chapter 4. We will discuss any doubts, questions, conceptual questions, word meanings, whatever you have, we will discuss that, right, on Monday. The next session is on Monday, and we will discuss that. We will cover the rest of these three topics and a test. So that is, I think, is what we'll do. And right. So next session on Monday, that is 21st, is what we'll do, and on Tuesday, that is 22nd September, we'll cover chapter 6, that is the business terminology chapter, right? That is also very interesting. 80% of the terms I believe most of us know, so we'll quickly revise. 20% of the terms are new. We will discuss that, right? So that shall also be covered. So be assured on your questions, be assured on any doubts that you have on chapter 4 or you have in this session on based on chapter 5, right? Be prepared with tough questions is what I'm saying. Be prepared with some conceptual questions that I'll try to bring in the next session, and we'll cover the balance of chapter 5 also on Monday, right? So with that, I'll try to close the session today. And if you have any questions in the next 5 minutes, let's discuss that based on today's concepts, based on today's chapter, whatever we have covered till SEBI, right? If you have any doubts, yes, yeah, and everyone, the MCQs, absolutely. Make a note of all the MCQs. I think we'll go by each MCQ by MCQ and discuss that. Very quickly, we'll do that for chapter 4, so that will cover everyone's doubts on the MCQs. We'll do that, right? With that said, stay home, stay safe. If you have any questions, we'll take another 2-3 minutes, and I'll try to answer most of that. And then 99% of things will be covered on 21st, Monday, right? With a quick revision of 4 and 5. Any questions, please shoot in all your questions if you have any. Right, okay. Is quasi related to quasi contract? It's one and the same thing. Quasi is a prefix that is used with most of the things. The quasi, as someone just said, it's more like a partial. It's more like a somewhat, not in real terms, but it is more like that. It's a quasi thing, right? Okay, any questions, shoot in, or else we'll just close this and I'll meet you on Monday. So be prepared with revision and MCQs, right? Absolutely, MCQs will be in the exam, and the exam is MCQ based. Thank you so much. Thanks. Okay, will Tuesday be the last session? Yes, Saurav, Tuesday is supposed to be the last session, but I think I'll try to get another session where we can have a full-fledged revision. I'll ask the authorities to grant that so that we can have a final entire syllabus revision. But let's see how does that fare out, right? Okay, I will take test on chapter 4 and 5 on Monday. Yes, we will have a quick 15 to 20 questions. I'm aiming at least 15 questions, right? Decentralization means not concentrated on the center, but actually flowing it down, right? Decentralization means the power is not in the center, but it is actually divided to different people. For example, if a father has 5 children and the father gives shares his control to five of his sons and daughters, that is decentralization of power, right? Anushka, you can send the questions on virtualclasses@ici.in, right? You can send that question there. I believe that can be done. Right? Okay. Trades to aid. Sir, difference between trades to aid to trade. Trade aids to trade. I didn't get the question, Mohammed. Please rephrase it. Difference between what and what? Trade aids to trade. Okay. Yes, chapter 4 and 5 on Monday, revision. Narshadul, difference between SEBI and what, right? There can be difference between two things, right? You just said difference between SEBI. Difference between SEBI and what? Okay. Absolutely, I'm aiming for a marathon session, right? A quick revision where we do a revision of the entire BCK very quickly, all the points back to back. I think I can do that in 15 minutes on Tuesday's last session, right? So okay. You can send the questions on virtualclasses@ici.in, right? Virtualclasses@ici.in. You can send that questions there. Do write your name and the subject, or mention my name, so that it knows it has to come to me, right? Okay. Priority sector lending means that some of the sectors that actually need real help, like agriculture or small women entrepreneurs or small cooperative societies, right? The sectors which actually need help in reality, those are priority sectors that are pushed by the government. Like, let's give more loans, easier loans to these sectors so that they grow, right? Absolutely. SBI also maintains CRR and SLR. Absolutely, it has to. Commerce and aids to trade are same. No. So commerce is a very broad term. Commerce includes everything that is related to business, right? Aids to trade are different industries or different businesses which are facilitating the business, right? Commerce is entire business as a whole. Business and commercial knowledge. That's the subject, right? Commercial knowledge is coming from commerce. And aids to trade is just a small part in when we are understanding commerce, right? Okay, Jay, what is it? Yes, I'm aiming that most of the questions are answered. Really stuck up with different projects, but I'll answer most of them, right? Thank you. Okay, I'll try to prepare a quick test. Absolutely, that is on my mind. We should do that. Janki, Jay, what is your question, please? Can you please type in the question again quickly, and then we'll close. Janki, also, if you can just type in your question again, it will be easier for me, right? Jay and Janki, if you can just post your questions again, and then we'll close this session. Last 2 questions, we are already ahead of time, right? Prashasti, what are your questions, ma'am? I think I tried to answer. If I missed, I'm really sorry if I missed any of those questions, right? Let me see if I missed your questions. Is there any other funding institution other than NABARD? Absolutely there are, but we'll discuss NABARD in this chapter. How does RBI control inflation trend? Prashasti, I'm taking up your questions, right? RBI controls inflation through currency, like we talked, currency controls. RBI was owned privately. Well, that is a thing I'm not honestly aware of. We'll have to search that, right? Right. Scheduled bank is which is actually given the status of scheduled bank by the RBI, right? Which are more government oriented. Those are scheduled banks, right? Okay. Test will be organized in just as we do the quick quiz, right? Prashasti, I hope all the questions are answered. Okay, Jay. Okay, yes, Jay, if the questions are not answered, virtual classes at ici.in. Shoot your questions there, right? In accounting, they trade and aids to trade, right? Okay, so trade is something which is buy and sell, right? Mohammed, trade is something buy and sell. Aids to trade is actually helping that. The businesses that are helping that buying and selling is aids to trade, and trade is actually the buying and selling, right? So that is what the difference is. Yes, that is the email, Pratham, right? We have @, so that is an email. Yes, Sangam, SIDBI is a funding institution. All right. We'll try to answer all those questions that are on email, right? That is on my priority list. I'm really sorry for the delay, but we'll answer those. So keep sending the questions. Don't be disheartened. I'll try to answer all of them, right? Okay. Jai, if your questions are not answered, please shoot a mail and we'll answer those, right? So let's close this session here and keep all your questions and doubts for Monday's session. That will be full, we'll cover 45 minutes for chapter 5, and then we will have a full-fledged discussion on any doubts that you have, plus the MCQs, plus a quick test, right? All right, everyone. Thank you so much. Stay home, stay safe, and I'll meet you on Monday, right? Thank you so much.